What's going on, guys? How are you doing? I hope you are doing well, and welcome back to the channel. If you are new to this channel, don't forget to subscribe, like, share with friends and family, and turn on your post notification bell icon so that you don't miss any content from this channel. So today I'm back with this video. We are going to explain how to trade US30 and US100, that is Nasdaq and the Dow Jones index. So what we are going to do is I'm going to show you the broader picture from the H1, then I'm going to show you how to do entries from the M15 and M5 time frame. So if that is something that you're looking forward to, press that like and stay on until the end of this video so that we really understand how this strategy works and how do we look at this thing. So guys, if you look at this H1 chart, this is US30, this is the Dow Jones, sorry, this is the Nasdaq. So we're starting with Nasdaq. I discovered something, or I realized there is something that happens when we look at this, at the highs and lows. So if you study the highs and lows of these indexes, they will tell you a story, and that story is what I'm going to narrate to you so that you can use in your own trading. So from the H1, first of all, if you're a follower of this channel, you know that we look at the overall bias, the direction of what, of price, the trend, right? So if you look at this chart, we're looking at what, at the direction, and the direction in this area, that is bullish, that is and that can be seen by anyone. This is more of a bearish move to the what, to the market. So what you have to understand is how is price moving, and if you understand that, you will not have any problems going forward. So number one, let's just see. Number one, I will explain how you look at this in real time. So this is Sunday, so the market is not moving, market is closed. So I'm just going to explain how you analyze this kind of a chart using what we have now. So what we have now, what do we have? We have this chart, and by only looking at this chart, you can see that this is a downtrend and price is moving down. So what are you going to do on M15? You are going to look for down movement clues so that you can join the trends, you can trade like that. So that's number one. We use market structure to look at the direction. And if you guys don't know, if any of us don't understand how to use market structure for bias and direction, you can check out our video on market structure on this same channel and learn how to do this thing. So remember, I said we want to study the highs and the lows, right? So what are we talking about? Yes, we have those structural highs and structural lows, but today I want you to focus on what, on the daily highs and the daily lows. If you have an indicator that shows the daily highs and daily lows, that's much better. But what we are going to do today is we are going to be drawing those ones. We are going to be drawing the highs and the lows. So let's take our trend line 2 and draw. So this is yesterday's high, right? So you draw that and you move to the next high for the next day. This was the next high, right? This was the next high, and this is the next high of what, of the day. So this is what you are doing. And what are you waiting for? You are waiting for price to retrace back to the what, to the to those daily highs and give you a clue about where it's going next. And that clue is what I'm going to explain to you when we talk about entries, right? So first of all, let's just look at how price was moving in the what, in the past. Let's just start here, right? What are we doing first? We are marking the highs, right? The daily highs and the daily lows, right? From H1, just mark them like that. Okay, so that's okay. It's not coming out nicely, but you mark it like that, right? So that's daily high number one, daily high number two, daily high number three, daily high. So you're not marking only the highs, you're marking the highs and the lows, right? Sorry about that. So that's the low, and that's a low and a low, right? For that day, for those days, that's what you are doing, right? So you go to the next, Okay, okay, it's not okay. Go to the next high, high, and you're also marking the lows, the daily lows and the daily highs. Okay, right. You mark. So that's how you are marking them. You this is a low, this is a high, this is a low, this is a high, low, high, and doing that. You're just doing that. You're just doing that. So what are we waiting for? Yes, we have marked the highs. We have done the marking. What do we do? How do we enter? I know most of you, that's your question. How do we enter? This is Nasdaq and this is Dow Jones. These things move, so you have to really know your story if you have to be trading these things. So yeah, this is marking. We have the overall direction. So as we go to the next time frame, what are we looking for? We are going to be looking for what? We're going to be looking for clues. So we're going to be looking for what? We're going to be looking for, number one, we want a retest, right? The first retest. Then number two, we want price to come back to that particular line, spike it a bit, then close below it when we want to sell. Then if we want to buy, we want, number one, a retest. Number two, we want price to spike it and close above that line so that we can get our entry. So that's what we want to do. So if I may use this to illustrate this to you, it is looking like that. Let's say this is the yesterday's high, then when price to come, that's Nasdaq, right? So this can be London session, right? Then we want it to retrace, then spike it with a pin, close below the line. So want it to spike it, close below the line, then that's our end. That's how we are doing it. We want to retest, then a liquidity grab above the what? Above the established high. Then we are getting it just below the horizontal line, which would have what? Which would have marked. So that's what we are doing. So let's go to M15 and try to see how this thing is behaving and how we can be taking advantage of these indices. So this is still Nasdaq, and we will go to US30, that's the Dow Jones, and try to see what's going on. So most people say Nasdaq is always in an uptrend. I don't know about that, but yeah, you can use that if you want, but I like to confirm things, right? So this is the daily high. Let me mark it like this. This is the yesterday's high. We are here. This is where we are. Price is set the high, right? So what happens the next day? Price just comes, spikes it, so it should leave a pin above the yesterday's high. If we need to consider it like that, it should leave a pin like that. Then after closing below this yesterday's high, this is supposed to be what? Your entry point. That's supposed to be your sell, and your stop loss is supposed to be here, right? So this is how you are entering, and your take profit. Okay, we'll talk about take profit when we talk about the Dow Jones. So now let's look for more examples of this. So you can be using the structural highs that's close to the daily high, but for now let's stick to the daily highs, right? You see, this is a daily high, this is the yesterday's high. So this is how the high was set, right? So remember, we want price to spike, right? We want price to leave a pin, right? So does this leaves a pin, you get in right there after closing below the what? Right, this closed here. So there's no way you're going to be taking this sell here. You wait for price to get close to the daily high. Remember, we sell high and we buy low. So what does that mean in this case? It means you are going to sell close to the daily high or close to yesterday's high, or you are going to buy close to yesterday's what? Low. Remember, it doesn't have to close, or it doesn't have to close above if you want to sell. It doesn't have to close below if you want to buy. So for you to sell, it has to close below yesterday's high, then you get in. If the risk is too much, you wait for price to retrace, get back, and so you see something like this. So this was a buy, right? It goes above, spikes, right? Leaves this pin. Then you are waiting for this candle. When it kind of gets back to this point, you sell there. Your next take profit, okay, remember I will talk about the take profits later, right? So you are not getting in here. Why? Because there isn't a pin above yesterday's high or below yesterday's low, so that's a pass for you. This is also a pass. Yes, it's a sell, we can all see that, but the problem is there is no pin above it. We want a pin. That's our strategy. If you need to consider something like this, you see this is a low, a pin, yeah, that's you. But for now, as people who are still learning, let's use and yesterday's, the daily highs and the daily lows. So let's go to the Dow Jones. What do we see? We want to talk about the H1 more because we know how we're looking at it. We go to M15 straight. Then now I know you now know what you're looking for, the structure you're looking for, the pattern you're looking for. So the next thing we want to talk about is how you enter and how you get out. So where is your take profit? Most of you enjoy that topic a lot. Take profits. So the take profits are going to be what? The next high, the next structural high, or the next structural low. If you are buying, you need to be looking for the next structural high. Swing highs, remember, swing highs, right? So we have the yesterday's high here. This is the spike, right? This is the spike and this is the pin. You enter just above the what? Above the yesterday's high or above the low, and your take profit is going to be this high, as you can see here. That's your take profit. And in a scenario like this, you don't enter there. Why? Because the stop loss is going to be too big. So the other thing, the other factor, or the other tool which you can use to determine these things is the risk to reward ratio. If your risk to reward ratio is less than 1 in 3, you're not going to take that trade, no matter how good it looks. It can be an Instagram kind of a setup, Instagram quality, but you're not going to take that, because the risk to reward ratio is very, very important in this business. So guys, you look for the yesterday's high. When it's set, look for a pin spike above or below it. Then look for the close above or below the yesterday's high. Then you take your entry. Your stop loss goes above or below the pin. Then your take profit is going to the next high, to the next structural high, or to the next structural low. I hope this was very helpful, and if you guys found this helpful, like this video, share with friends and family and other traders in your communities, and remember to trade what you see. And I've just shown you some of the things to look out for, some of the things to see. Have a beautiful 2022.